Good morning, SMF Street traders, and we are in the fourth day of options expiration, and today's date is 9/16 of 2010. Okay, which brings us to Research in Motion. This is a preview by an analyst, and as we do this video and we're teaching our staff to understand what the gimmicks are within the lines and what they mean. Basically, what they're going to think is that their ASP is to be in line to slightly above the low end of guidance. Okay, this is the key part of the number, and this is the statement that will be used to try to get a rally out of the stock. That's number one. Okay, on the other side is that subscriber additions to be negatively impacted by slower what? Adoption in key growth markets such as India, and slower than anticipated uptick of the torch at AT&T. Target $65 from $80. So, you know, after several months of us shorting RIMM down, and we have those live videos, to do it was to understand where the deterioration in that growth pattern would be relative to its competitors. And so RIMM has a lot more competitors in 2010. It's not like it was when they had less competitors in the field in the early 2000s, and what a great stock RIMM has always been. And it's always been a great money maker, long and short. And so basically our take on it is that RIMM's estimates is they have brought them down. We're going to be looking at what they do in North America. We're going to be looking at, we want to know where the international numbers are versus the retail U.S. consumer numbers. So you have people that spend money in the U.S., but then you have people who spend money internationally, and we're going to compile the data, the international data, as far as what that sales ratio is. And we'll be doing that not only with this one, but a lot of them, including the FedEx. So basically, they're going to hit a bottom in their current model. I don't see where the company can be robust moving forward, particularly in the current slower environment looking forward into 2011 or during this quarterly slowdown that we're having relative to your GDP. So what we're going to be looking at is, you know, what has happened in all of those key areas in the reporting session as far as who's buying what, and then we will understand how to stay long and or short. So as we can see it, there's no great upside. We're not giving it a great upside. It'll be a mechanical trade, long and short. If they pop it, we're selling short into it. We'll get our entries at the right time. I will give the SMF Street Pro traders the entries and exits. I'm going to conclude this video for now. And once again, let's rumble with the day ahead of us, which is 25 minutes before the bell.